Hey, how's it going? So, I'm gonna start a series where I kind of gonna explain like all the basics of trading, like stuff that I kind of use like one by one. I'm sure you've seen this kind of thing like done before by other people, but it's kind of gonna be like more so like I don't know, not really like version, but like I don't know the way I explain it. So, this video is gonna be on market structure, but I'm gonna have a video coming out on like fair value gaps, inverse fair value gaps. I'm gonna have a video coming out on draws or liquidity, maybe sessions. Maybe I'll try to talk about that. Yeah, probably like sessions. I'll try to talk about like breaks of structure here a bit. Liquidity, that'll be in the like draw of liquidity. Yeah. SMTs maybe, and displacement for sure. So this video is just gonna be on market structure. So typically, if we look at Nasdaq from the 1 day, so each candle is 1 day, you can tell that the market kind of just moves like this. It goes up, down, up, down. Especially like Nasdaq, that's why I really like to trade it, is because it's always going to be in like a continuous upward motion. See, like if you look, upward move, smaller downward move, you kind of get the idea. So if we look here, like look, move up, smaller move down, move up, smaller move down, move up. Obviously, like that's a bigger move down, but like, you know, even if you look at the 1 week, like it's kind of follows that pattern. And then, so obviously that's the higher time frame. So obviously that's going to hold a lot more power. I also have a video probably coming out on time frames. So that'll be a pretty quick one. But basically, summarize it: higher the time frame, the more power. As you can see on the higher time frame, very bullish. Like if you're just a long on like the weekly time frame, like you basically guaranteed win if you had a big stop loss. You know what I'm saying? So then, like obviously, like if we even drop down, we can kind of see like it in different senses. Like if we drop down a bit, see we kind of, here we got the high, and we go down, we got a higher low, higher low, then a lower low, and a higher low, lower low, higher low, lower low, then it hits that point, we go up, and then we create a break of structure. The break of structure would be like right here, like when it went above that, and then see we broke the structure, lower high, higher high, you know, kind of get the idea. So I think market structure is one of the most important things, in my opinion, because obviously, like when I mark out the day, let's say, we'll take today for example, right? I go down to typically the 1 hour, 4 hour time frame right off the rip, start of the day. So I'm looking at the 1 hour time frame here, and I see that it made the low, then it made a high, then it made a higher low, then it made a higher high, higher low, and then it's just kind of consolidating here. But so I was pretty bullish on the day today. I actually got break even on my trade today, but once again, drop down 15-minute. So like if you're looking at the chart here, right? If you're looking at it, look a little bit bigger. If you can't see all this area and you're just looking at it here, and or like let's say you're looking at it here, everything here you can't really see. So you see that it made a high, and then a lower high, and then a higher high, and then. So when you're right here, so you're looking at it here, you see that move down, and then when it makes the lower high, you can pretty expect that it's going to keep going up. kind of eventually take out that high, right? So when I'm seeing this, obviously I'm not going to try to go short and try to like predict that it's going to go all the way here. Like obviously that could happen, but typically it follows a trend, right? So that's kind of just like probably like the first confluence for me. Just like trying to take the trade with the way that the market is going. I'm not going to try to predict like, you know, the crazy move like all these guys you see like through the top tick, like they predict when it's going to completely change, like try to get up here to go down. I'd much rather see this than try to take like a trade like here to go out there, you know what I'm saying? So, and then I'll kind of do a little bit more, kind of just explain. So market structure, a bullish market, we get the higher high, the higher low, the higher high, the higher low, the higher low, higher low. And whenever we get these, we also get breaks of structures. So there, you can see it broke to the upside. So that's also like another kind of confirmation that your directional bias is correct. And it goes, breaks the structure again here, and again. So that's like a bullish, this bullish market structure. But then if we're to look at bearish market structure, obviously it's the complete opposite of that. You get the high, you get the low, you get the higher low, the lower low, higher low, lower low. I mean lower high, lower low, right? And then once again, we still also get the breaks of structure here, here, here. So that's kind of like what I trade. Like I'm not trying to see that low. I'm not trying to predict the absolute low and then, you know, predict that it's going to go up. Like I'd rather try to catch that move there, you know what I'm saying? So that's kind of it of this video. You know, in the comments if you have any questions, you want me to clarify anything. But yeah, first video, market structure.